The surge in AI demand is sending shockwaves through the tech industry, and two stocks are primed for a breakout: NVIDIA, NVDA, and supermicrocomputer, SMCI. The catalyst behind this trend is the growing adoption of artificial intelligence across various sectors, from healthcare to finance. According to a report by McKinsey, AI could add up to $13 trillion to global GDP by 2030. One key driver of this growth is the increasing use of deep learning in applications such as natural language processing and computer vision. NVIDIA's graphics processing units, GPUs, are perfectly suited for these tasks, making them an essential component in many AI systems. The company has also made significant strides in its data center business, which is expected to continue growing rapidly. Meanwhile, Supermicrocomputer has seen its stock price surge due to its role as a key supplier of motherboards and servers to the world's top tech companies. Its products are used in many AI applications, including those developed by NVIDIA. The company's strong revenue growth and increasing market share have made it an attractive investment option. The data points supporting this trend are clear. According to a report by IDC, the global AI chip market is expected to grow from $5.4 billion in 2020 to over $20 billion by 2025. NVIDIA has a significant lead in the space, with its GPUs accounting for nearly half of all AI chip sales. Supermicrocomputer's revenue growth has been consistently strong, with the recent quarter showing an increase of over 30%. As we look ahead, there are several scenarios that could play out. One possibility is that the companies continue to benefit from the growing demand for AI chips and servers. Alternatively, the market may become saturated, leading to decreased demand and lower stock prices. Of course, no discussion of potential investment opportunities would be complete without considering the risks. One key risk factor is the potential for increased competition in the AI chip space. Several companies, including AMD and Intel, have announced plans to enter this market, which could erode NVIDIA's lead. Additionally, there may be regulatory hurdles or supply chain disruptions that impact Supermicrocomputer's business. Tactically speaking, investors may want to consider buying NVDA at support levels around $230 or higher, depending on their risk tolerance and investment goals. A stop-loss order below the 50-day moving average of around $220 could also help limit losses in case the stock price declines. SMCI is another interesting option, with potential entry points around $30, $35, based on historical resistance levels. Investors may want to consider buying on weakness or during periods of high volatility when the stock price dips below support levels. One-line takeaway: NVIDIA and Supermicrocomputer are poised for a breakout as AI demand surges, but investors must be aware of potential risks and competition in the space.